Wynn Resorts. The ultra-luxury casino operator Wynn Las Vegas, Encore, Wynn Palace, and Wynn Macau, Encore Boston Harbor, and the Arab world's first casino resort opening in UAE.
FY 2025 revenue $7.3 billion. Q1 2026 revenue $1.86 billion beat estimates. Macau Palace mass drop up 19%, and Las Vegas revenue growing 6% year-over-year.
Steve Wynn founded Wynn Resorts in 2002 after selling Mirage Resorts to MGM for $6.4 billion, applying 30 years of luxury gaming expertise to build Las Vegas's most opulent resort brand.
Wynn Palace opened on Cotai Strip in 2016, claiming Macau's most coveted gaming corridor. Encore Boston Harbor followed in 2019 as New England's premier integrated resort.
Steve Wynn resigned in 2018 amid misconduct allegations. Matt Maddox led the COVID-era recovery, and Craig Billings took over as CEO in 2022, refocusing on operational excellence and capital returns.
Wynn Las Vegas generates approximately 45% of revenue, casino, hotel, food and beverage, and entertainment across the Strip's most luxurious integrated resort campus.
Macau operations, Wynn Palace and Wynn Macau, contribute 43% of revenue. Encore Boston Harbor adds 8%, serving New England's gaming market.
FY 2025 revenue $7.3 billion at 60% gross margin. EBITDA margins above 30%, among the highest in gaming. Net debt approximately $10 billion following resort reinvestment.
Q1 2026, revenue $1.86 billion, adjusted EPS $1.25 beat the $1.18 estimate. Wynn Palace delivered mass drop up 19%, the standout number in a strong quarter.
Las Vegas Sands dominates Macau and Singapore with the largest global footprint. MGM Resorts operates at lower average room rates, a more volume-oriented, less luxury-focused model.
Melco Resorts competes directly in Macau's luxury tier. Caesars and Genting are distant peers. Wynn's ultra-premium positioning, average nightly rates above $500, limits but defines its market.
Wynn's moat is brand exclusivity. Customers choose Wynn for the physical environment, service standards, and status it confers. These intangibles take decades to build and cannot be replicated.
Wynn operates 5 integrated resort properties: Las Vegas, Boston, Wynn Macau, Wynn Palace in Cotai, and Wynn Al Marjan Island in UAE, under construction, serving ultra-premium gaming and hospitality customers.
Wynn Al Marjan Island in Ras Al Khaimah will be the first legal casino resort in the Arab world, a market Wynn positioned for years before UAE issued its gaming license.
Craig Billings became CEO of Wynn Resorts in February 2022, previously CFO at Wynn and earlier a tech sector investment banker, bringing financial discipline and capital return focus to the company.
Billings holds degrees from Cornell and Harvard Business School. He has returned over $4 billion to shareholders through dividends and buybacks since 2022, while advancing the UAE development.
Wynn Resorts. The ultra-luxury casino operator, $7.3 billion in FY 2025 revenue across 5 integrated resorts in Las Vegas, Macau, and Boston, with the Arab world's first casino resort opening in UAE.
Q1 2026 revenue $1.86 billion beat estimates. Adjusted EPS $1.25 beat the $1.18 estimate. Wynn Palace mass drop surged 19%, with Las Vegas up 6% and UAE opening approaching.
Wynn Resorts just delivered a solid first quarter that beat estimates on both revenue and earnings, and then largely ignored its own results to spend most of the earnings call talking about the UAE. There is a reason for that. Today we break down Q1 2026 for Wynn and explain why this classic Las Vegas gaming company might be in the early innings of a transformational growth cycle.
Wynn Resorts was founded in 2002 by Steve Wynn, the legendary casino developer. The company opened Wynn Las Vegas in 2005 and Encore in 2008, both on the north end of the Las Vegas Strip. Wynn Macau opened in 2006, making Wynn one of the 6 concessionaires in the world's largest gaming market. The brand has always been synonymous with ultra-premium hospitality, the highest room rates, the best food, the most attentive service.
The business model is integrated resort operations. Wynn generates revenue from gaming, table games and slot machines, and from non-gaming, hotel rooms, restaurants, retail, and entertainment. The premium positioning means Wynn earns higher margins per gaming position than peers. Its intentional rejection of the value segment protects margins and attracts the high net worth customers who drive outsized gaming revenue per visit.
Revenue for Q1 2026 came in at $1,856,762,000, up 9.2% year over year. Analysts were expecting approximately $1,780,000,000, a beat of over 4% on the top line. Wynn Macau contributed meaningfully as Macau's mass-market gaming revenue continues its post-pandemic recovery.
Earnings per share of $1.25 beat the consensus estimate of $1.18, a 5.9% positive surprise. The Las Vegas operations generated EBITDA margin above 30% for the quarter, among the best in the industry. Food and beverage revenue per cover and average daily rates at the hotels both hit record levels as affluent consumers showed no sign of trading down.
Wynn Macau is the segment to watch. After years of regulatory disruption, VIP recovery uncertainty, and COVID-related travel restrictions, Macau's mass-market gaming is now running above 2019 levels in aggregate. Wynn's Macau operations benefited from the premium mass segment specifically, the upper end of mass-market gaming that sits between true VIP and casual tourists. This is Wynn's strongest competitive position in Macau.
Las Vegas continues to be the earnings engine. Convention business in the first quarter was strong. Group bookings generate guaranteed room revenue, restaurant spend, and ancillary revenue across the property. Wynn's forward convention calendar for the second and third quarters is at record levels. The Nevada gaming market has proven more resilient than critics expected, driven by the ongoing migration of financial services and tech firms to the Las Vegas area.
CEO Craig Billings reaffirmed full-year guidance and raised the outlook for Macau EBITDA modestly above prior expectations. But the conversation on the call consistently returned to Wynn Al Marjan Island, the casino resort being built on a man-made island off the coast of Ras Al Khaimah in the UAE. This is the first licensed casino in the Arabian Gulf, and Wynn secured one of the first gaming concessions issued by the newly created UAE Gaming Authority.
The UAE opportunity is extraordinary in context. There are over 300 million people within a 4-hour flight of Ras Al Khaimah. Saudi Arabia, a country with over 30 million people and the fastest-growing travel sector in the world, is within easy reach. The Gulf state wealth concentration, sovereign wealth funds, high-net-worth families, international business travelers, represents exactly the premium customer segment that Wynn has spent 20 years building its brand for.
Craig Billings has been CEO of Wynn since 2022, having previously served as CFO. He was the architect of the UAE deal and has overseen the repositioning of WynnBET, the company's digital gaming platform. Billings has consistently emphasized capital discipline. Wynn has been paying down debt and returning capital to shareholders while managing its Las Vegas and Macau cash flows, while simultaneously committing to the UAE investment, which will require several billion in construction capital.
The bull case is the UAE opening a new premium gaming market in 2027 with no established competitors. When Macau opened to foreign gaming operators in 2002, the companies that entered early generated enormous returns as the market grew for over a decade. The UAE is not Macau. The population and regulatory environment are different, but the precedent of a new premium gaming market opening is powerful for whichever operator establishes the brand standard first.
Macau recovery is the near-term catalyst. The VIP segment, historically the highest margin business in Macau, is still running below pre-pandemic levels. As Chinese outbound travel continues to normalize and Chinese high-net-worth consumers regain confidence in cross-border travel and spending, VIP gaming at premium resorts like Wynn Macau should see sequential improvement. Each percentage point of VIP recovery is meaningful to EBITDA.
The bear case is geopolitical. Wynn's two largest markets, Macau and increasingly the UAE, are in regions with elevated political risk. China-Taiwan tensions, Chinese regulatory posture toward Macau gaming, Gulf state political dynamics, these are not hypothetical concerns. Gaming companies operating in China-adjacent or Middle Eastern markets have experienced abrupt regulatory changes before, and Wynn's geographic concentration makes it more sensitive to these risks than U.S.-focused peers.
The UAE construction and opening risk is real. Building a landmark casino resort in a country with no existing gaming infrastructure, no labor force trained in casino operations, no regulatory enforcement experience, no established compliance ecosystem is genuinely complex. Wynn has done this before in Macau, but the cultural and operational environment in the UAE is different in ways that are hard to model in advance.
On the balance sheet, Wynn carries substantial debt from the Macau casino construction and the financing of expansion projects. Net debt is elevated relative to EBITDA, but the company's Las Vegas and Macau cash generation is substantial and provides comfortable coverage. The UAE project will require additional capital commitment. Management has flagged the financing plan, but full details are expected later in 2026.
The bottom line, Wynn beat estimates. The core business in Las Vegas and Macau is performing well, and the UAE represents a potentially transformational growth catalyst for a premium gaming brand that has no peer at its quality level. The stock is pricing in the existing business, but arguably not fully reflecting the optionality of a brand new major gaming market. For investors comfortable with the geopolitical risk, Wynn is a premium compounder with a real growth story.
Wynn's property-level economics are among the best in gaming. The Las Vegas properties generate EBITDA margins in the mid-30s, well above the industry average, because the Wynn brand attracts premium customers who spend more per visit on non-gaming amenities: restaurants, nightlife, spa, retail. Non-gaming revenue as a share of total Las Vegas revenue has increased from 42% 5 years ago to over 50% today. This shift improves revenue quality. Gaming revenue can be volatile based on hold percentages and VIP volumes, while food and beverage and hotel revenue are more predictable.
Macau is both Wynn's largest earnings contributor and its largest source of uncertainty. Wynn Macau generated approximately $1.1 billion in revenue in Q1 2026, representing about 60% of consolidated totals. Macau visitation has recovered to roughly 90% of pre-pandemic levels, but the composition of gaming customers has shifted. VIP mass, high-stakes Chinese nationals, has not fully returned. The growth in Macau is coming from premium mass, upper-middle-class Chinese tourists, which is lower volatility but also lower margin than traditional VIP. Wynn is adapting its non-gaming amenity strategy accordingly.
UAE and expansion markets represent the long-term option value in Wynn. The Wynn Al Marjan Island Resort in Ras Al Khaimah is scheduled to open in 2027 and would be the first legal casino in the Middle East. The UAE gaming market is a greenfield opportunity with no established competition and a wealthy international tourist base. Analysts have modeled UAE EBITDA contribution of $200 to $400 million annually at maturity. That range alone, discounted back, adds $20 to $40 per share to most price target models.
The valuation case for Wynn is relative. At roughly 10 times EBITDA, Wynn trades at a meaningful discount to Las Vegas Sands, despite similar Macau exposure and arguably better Las Vegas asset quality. The discount has persisted because Wynn's balance sheet carries more leverage and because Sands has Singapore as a higher quality second market. But if UAE ramps successfully and Macau continues recovering, Wynn's discount could narrow. The near-term catalyst is not a specific event. It is the gradual compounding of Macau mass growth and Las Vegas non-gaming revenue against a fixed cost structure.
This is financial education only, not investment advice. Gaming companies carry regulatory, geopolitical, and operational risks that require careful individual assessment. Review Wynn's SEC filings and consult a licensed financial professional before making any investment decision. Subscribe for more Charged Alpha breakdowns.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.